Brainchip is listed on the ASX and has a market cap of 612 million Australian dollars. Although its roots are in Australia, Brainchip now operates from Silicon Valley and offers a new technology, the foundational patented intellectual property for true neuromorphic computing, and also a pathway to a new paradigm, the age of environmental artificial intelligence, with neuromorphic capability embedded at the physical edge of the digital information network. This capability is making dumb devices smart devices smarter, and through the dramatic energy efficiency gains and one-shot learning made possible by neuromorphic computing, even making new types of devices feasible. This is how neuromorphic computing works on a simple level. Where current computing processes every single change from one state to the next, neuromorphic computing picks up just the changes, massively reducing energy use, and so also latency, heat buildup, and error risks. For more depth, the technology is covered well on Brainchip's own website and academically, so we won't focus on that in this assessment. Note that despite the name Brainchip, the technology has nothing to do with the idea of implanting computer chips into people's brains. That is more Neuralink's gig. At base, Brainchip has two value concepts operating. Firstly, the expected value of revenue from license holders who initially use Brainchip's IP, and secondly, the expected value of flow on demand from the technological revolution unleashed by neuromorphic capability. And this is the crux of the valuation issue for potential investors in Brainchip. Under the first value concept, Brainchip has reported a wide range of partnerships with Tier 1 technology partners. But the details are protected by non-disclosure agreements, and the market awaits reported revenue flow as evidence of successful commercialization, still likely to be several quarters away. Without figures, attempts at assessing value under this concept are likely to be incomplete at this stage. Under the second longer-term value concept, Brainchip is light years ahead of its competition, with next-generation neuromorphic capability available as IP or silicon, integrated with AI, for example, and in presenting what is possible, actively shaping the expectations of technology partners and shaping its operating environment in Silicon Valley. It's a form of autopoiesis, if you like, culturing the environment to ensure its own survival. The current value of Brainchip's IP portfolio and moat is significant, and its future value is potentially very significant as the technology frontier, consumer expectations, and competitive markets push companies to adopt the capabilities enabled by neuromorphic computing. In other words, Brainchip will one day benefit massively from the technology revolution it is currently instigating. Sin assessment. Current pricing reflects the limited state of evidence of uptake of Akida, Brainchip's technology, but does not reflect the paradigm shift it represents. Put another way, if Brainchip were a mining company, it is currently in its orphan stage. The resource is well defined but needs to be extracted, there is low news flow, and shorting levers this situation further. Or again, imagine valuing Apple in 1990 at 30 cents per share as the market did, based only on the idea that one day Apple could fully replace the typewriter. It's valid, but is a somehow limited vision, and in retrospect misses the main point about Apple. The Brainchip share price currently reflects only one concept of value, with Brainchip playing the long game and using non-disclosure agreements to protect technology partners as it aims for ubiquitous uptake of its technology. At under-the-radar prices, this one is worth keeping an eye on. Not financial advice.